The state budget may be under control, but asset sales still seem inevitable to pay down borrowings. Halfway through the financial year, the figures are steady, but not good enough to tackle an $81 billion debt.
The Queensland budget is not in great shape, but compared to the Commonwealth's financial woes, it's stable. Good enough for the latest figures to be garnished with a Christmas treat from Treasury. Where previous updates have revealed wild fluctuations, this mid-year review indicates not much has changed since the budget in June. Revenue this year will be slightly higher than predicted, but slightly lower next year. This year's deficit is a bit better than forecast. Next year's will be a bit worse. But overall...
And our expenses are moving into line with our revenue, so that we are starting to get our operating statement back onto a level keel.
The trouble is, an even keel is not enough to reduce debt. Although borrowings this year are now expected to be more than $1 billion lower, the longer-term outlook hasn't changed.
Debt will continue to grow and reach $81.45 billion by 16-17.
With an annual interest bill of about $4 billion.
It won't be able to be dealt with simply by making adjustments to the operating statement. We will have to look at other areas.
Other areas means privatisation. The mid-year review hasn't changed much, and neither has Tim Nicholls' preference to sell some assets after the next election. The opposition's view hasn't altered either.
No plan other than to build a palace of indulgence for themselves, to sell off assets and sack as many workers. The economy's stalled, people are losing confidence in this government.
The budget update doesn't measure confidence, but other indicators are steady, except employment growth, which is now tipped to be lower than the budget forecast. Economic growth is still expected to reach 6% 2 years from now. In the meantime...
Merry Christmas.
And a fiscal new year. Chris O'Brien, ABC News, Brisbane.